Good day, everyone, and welcome to this week's Business and Investment Tips Program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, the focus is on inflation is falling, so why is food still so expensive? We explain what the latest inflation figures mean for your household budget, savings, investments, and the direction of interest rates. Headline inflation continues to ease. The National Bureau of Statistics reported that headline inflation fell to 15.43% year-on-year in July, down from 15.91% in June. This marked a 0.48 percentage point moderation. Month-on-month inflation also eased to 1.57% from 1.66%, indicating that prices still rose but at a slightly slower pace. The Consumer Price Index rose to 145.3 from 143.0, confirming that the overall cost of living remains high despite the lower inflation rate. Food prices tell a different story. The main concern was food inflation, which rose sharply to 20.31% year-on-year, up from 17.52% in June. On a month-on-month basis, food inflation accelerated to 5.56%, up from 3.75%. This was driven by higher prices for crayfish, fresh pepper, onions, carrots, rice, yam, tomatoes, dairy, plantain, beef, and eggs. This sharp monthly increase is significant because food accounts for a large share of household spending. Therefore, many Nigerians may not feel the relief suggested by the lower headline rate. Food and non-alcoholic beverages also remained the largest contributor to overall inflation. Core and energy prices provide some relief. Core inflation, which excludes volatile farm produce and energy, eased to 14.97% year-on-year. More importantly, month-on-month, core inflation slowed sharply to 0.15% from 1.66%. Energy prices also fell to 2.39% during the month, while farm produce prices rose by 4.66%. This indicates that July's inflationary pressure came mainly from food rather than broad-based price increases. Urban inflation stood at 16.12% compared with rural inflation of 13.77%. On a monthly basis, urban inflation slowed to 1.90%, while rural inflation increased to 0.78% from 0.52%. Inflation outlook: headline may ease, but food remains the risk. Headline inflation may continue to moderate gradually in the coming months, supported by softer core and energy inflation and the approaching harvest season, which could improve the food supply. However, July's 5.56% monthly food inflation shows why the outlook remains fragile. If food prices continue to rise by 5.56% each month for a full year, the simple annualized rate would be about 66.7%, while compounding would produce an annual increase of about 91.4%. In practical terms, the same food basket costing 100,000 naira today could cost approximately 191,000 naira in 12 months. This is an illustration, not a forecast, because monthly inflation can rise or fall. The key factor to watch is whether increased harvest supplies materially ease food price pressures from August onwards. Why the MPC may remain patient. The July report presents a mixed picture for the Central Bank of Nigeria. Lower headline, core and energy inflation support the case for eventual monetary easing. However, the sharp rise in monthly food inflation makes an immediate rate cut less likely. Following the decision to retain the monetary policy rate at 26.5% in July, we expect the MPC to maintain a cautious stance at its next meeting. The harvest season may improve the food supply and slow food price increases later in the year. Nevertheless, the committee will likely want to see sustained moderation in monthly food inflation, continued naira stability, and lower underlying price pressures before cutting rates. Investment strategies to stay ahead. Investors should avoid leaving substantial funds idle in their non-interest-bearing accounts. Treasury bills, OMO bills, FGN bonds, money market funds, and high-quality commercial paper remain useful for preserving capital and generating returns. Investors may also consider gradually locking in attractive longer-term yields before interest rates start to fall. For equities, the focus should remain on quality companies with strong earnings, pricing power, and healthy balance sheets. Diversification across fixed income, equities, and foreign currency assets can also reduce risk, but every investment should align with the investor's objective, age, and risk appetite. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed and have a great week. Bye.